Did you know that Cathie Wood's ARK Invest thinks Tesla stock will reach $10,000 soon? Cathie Wood, and therefore ARK Invest, is famously known for being a Tesla bull. Because of this, many are doubtful whether Wood's predictions are actually attainable. Still, ARK Invest's data is worth considering, so you definitely would not want to miss this one. In a statement in late September, ARK Invest CEO Cathie Wood said she's standing by her bullish bets on Tesla. "We stand by all of them," Wood said when asked about her opinion on Tesla, Roku, and Bitcoin. In mid-October, ARK Invest's CFA Tasha Keeney joined CNBC's Squawk Box to react to Tesla's latest quarterly earnings report. When asked about the reason for ARK's positive stance on Tesla, Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market, but we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." According to ARK's CFA, this is because Tesla uses their customers' cars to capture data to train their neural networks. According to Tesla, the neural networks are their bird's-eye view networks that take video from all cameras to output the road layout, static infrastructure, and 3D objects directly in the top-down view. The said networks learn from the most complicated and diverse scenarios in the world, iteratively sourced from our fleet of millions of vehicles in real time. Keeney emphasized that on the recent earnings call, Tesla CEO Elon Musk reiterated that they are going to do a wide release of the full self-driving beta software to North American customers. That signals confidence in that platform, which, by the way, we think is a multi-trillion-dollar market in the next 10 years, says Keeney. CNBC Squawk Box host Joe Kernan also asked Keeney about the Tesla robotaxi. Keeney shared, "They've committed in previous calls to mass manufacturing of a robotaxi-specific vehicle, so I do think it could be that car. And again, I think that manufacturing commitment is pretty meaningful because you can promise full autonomy via software all you want." When asked about her thoughts on the recession fears and whether or not Musk seems to have any demand fears or supply concerns, Keeney said, "As I read other articles and other analysts' opinions, I think there are demand fears out there. I think that they're unfounded." ARK Invest CFA looks at EVs as a percentage of overall auto sales. According to Keeney, they were something like 7% of total vehicle sales last year. That said, ARK saw gas-powered car sales decline in the past couple of years and are seeing EV sales up on a year-over-year basis. "We saw Tesla's revenue alone grow 50% this quarter, so I would look at that. And for macroeconomic concerns, I would be much more concerned about the companies that have the majority of their revenues dedicated to gas-powered car sales, because that's what we think is going to decline in the future as EVs become more cost-competitive," says Keeney. In a recent interview, Yahoo Finance anchor Julie Hyman asked Cathie Wood whether the economic shock that the ARK Invest leader talked about caused a subsequent shock to Wood's long-term holdings in Tesla in terms of the stock price and company financials. Wood said, "Certainly, all stocks are experiencing difficulty in this environment as the market tries to understand how far the Fed is going to go and how deep this recession is going to be. So Tesla, as I mentioned, is a solution to the problem." According to Wood, it is very interesting to see that the gasoline demand in the US this summer dropped to levels that have not been seen since 1997. That's real demand destruction, and it couldn't have happened, we do not believe, without electric vehicles at the margin taking huge share from traditional automobiles, says Wood. That said, Wood believes that concerns should be directed at the traditional auto industry instead of the fast-emerging EV industry. "We think the gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and that the traditional auto industry has to figure out a way to migrate into electric vehicles," explained Wood. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Later in the interview, Yahoo Finance host Julie Hyman told Wood that her 3 to 5 year time horizon means not only kind of a midterm or recession-proofing her companies, or not just recession-proofing her portfolio, but also kind of midterm-proofing it. You're general election-proofing your portfolio, Hyman told Wood. Hyman then proceeded to ask the ARK Invest leader how she goes about identifying disruptive innovation that doesn't get disrupted by public policy or political agenda. Wood answered, "We have a 6-metric scoring system very much focused on innovation." Wood explained that one of the scores in ARK's 6-metric scoring system is thesis risk, which apparently has a lot to do with government policy. In the early days of ARK in 2014 and 15, we were thinking, okay, government may be very concerned about the safety of autonomous vehicles, but as we've moved through these last 8 years, what we've seen, thankfully, is the government and regulators in particular very focused on data. Said data shows that 85% to 90% of vehicular fatalities are caused by human error. That said, Wood concluded that once said human beings are taken out of the equation, 35,000 to 40,000 lives will be saved in the United States alone. According to Wood, there are around 1.25 million car fatalities across the globe, which is why Wood is gratified to see that the regulators are looking at Tesla vehicle fatalities and said that for the most part, most of those fatalities were caused by human error. Wood shared that the regulators informed them that people driving Tesla vehicles are much safer thanks to the various automated driving capabilities and that Tesla is up to 40% safer than most other cars. We're very focused on what governments are studying in terms of the data and if they stick to the data. Innovation typically solves problems and makes the world a better place, says Wood. It is no secret that the ARK Invest founder and CEO Cathie Wood is big on innovation. In fact, ARK Invest focuses solely on disruptive innovation, which explains why they are bullish on Tesla. In fact, terms such as disruptive innovation and convergence always seem to pop up when discussing the investing rationale behind Cathie Wood's hugely successful ARK Invest Asset Management Fund. ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization. Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy, which explains her bullishness on the EV company. As a matter of fact, Wood's flagship fund, ARK Innovation ETF, bought 66,190 Tesla shares, marking the firm's second purchase in October. ARK bought a tranche after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release. In the latter part of October, Wood bought over 132,000 after the stock fell following Tesla's Q3 report. Today, Tesla is the largest holding in her flagship ARK Innovation ETF, that's down more than 55% for the year. As of November 2022, Tesla has a market cap of $645.43 billion. This makes Tesla the world's 6th most valuable company by market cap, with Apple in the lead. Market capitalization, simply referred to as market cap, is the total market value of a publicly traded company's outstanding shares and is commonly used to measure how much a company is worth. Tesla's market cap as of November 4, 2022, was reported to be $655.13 billion by Yahoo Finance and $655.13 billion by NASDAQ. Tesla's stock price is currently sitting at $207.47 per share. Today, a $10,000 price tag for Tesla stock may seem far-fetched. Perhaps in the long run, this may prove to be possible, but many experts believe that Tesla stock won't soar too high anytime soon. Nonetheless, Cathie Wood remains to be a firm believer in Tesla. Wood also believes that Tesla is a long-term stock, so it will be worth waiting for the stock to flourish into the future. It also works for Tesla that the company has successfully ramped up production. Plans for the much-anticipated Tesla Semi and Cybertruck are also on track. Overall, experts believe that with the way Tesla performs today, it is possible for the EV company to reach a higher market cap. After all, many believe that Tesla will become one of the most valuable companies in the future. Subscribe to this channel for more Tesla stock content.